What's going on, everyone? Man, it's been quite some time since I've made a video related to financial markets that wasn't silly or as a joke, but that's going to change moving forward because I'm finally ready to come back and talk about markets and the developments that are continuously ongoing. Nothing is set in stone. It's a constant process of evolution. Lots of things are happening right now that a lot of people are not aware of because they simply choose to not read the important things that teach you and tell you about everything that's going on. A lot of people tend to stick to social media and listen to their peers about what's going on, which leads to very, very bad decision making. So we're going to go ahead and just cover some things that have happened since I started talking about them in 2021, see where we are now, and then very, very soon I will be coming back explaining financial markets and the developments therein on a daily basis to keep those of you who actually would like to learn and figure out what's going on in these markets a chance to do so. So, around 1 year ago, a little bit more than that, I started making a bunch of videos covering China and their potential economic recovery. At the time that I started making it was around the same time that all of the DRS stuff came out for AMC and GME. It was also a time when delisting fears were all over the media. It was also a time where China, most of their tickers, were trading very near their 52-week lows. So that's pretty good time to get into something is when all those attributes line up together. Now, since then, and this is, ranging between late 2021 all the way up to the beginning of this year, I've been covering China, and we're finally seeing the benefits of it. And I say finally, but we didn't have to wait that long. A lot of these tickers are paying dividends for a lot of us who got into them at the right time. And that just goes to show that opportunity is opportunity. You can't let feelings get in the way, especially if they are misguided and inaccurate feelings based on inaccuracies. So since the China talk started, and mind you, at the same time I was making videos promoting China and going over the potential reasons why I thought it was going to be a very substantial investment moving forward. And not only me, but the Fed Reserve agrees, BlackRock agrees, multiple countries around the globe agree, IMF group agrees, and the OECD agrees. And it's been a long-standing process to get China's growth back on track. They are going to take over, and as BlackRock has stated in their previous report, as the global leader of economic growth, while the United States pays off its debt. Very, very, very simple. However, this is what complicates everything, is when you got FUD all over YouTube trying to convince you that China is going to crash, their economy is going to burn, but there's really no factual information behind any of these videos. That is what I'm here to bring, is factual information to the table, always backed up by sources, to keep you informed with the most accurate information that I can provide you. Now, also around 1.5 years ago, I took extraordinary heat from Reddit. There was and I've counted, over 5,500 posts calling me a shill, saying this and that, because I went against the DRS narrative, because I read the documents and I saw the risks involved with it. And I also saw no one wanted to take those risks into account. And lo and behold, 1.5 years later, nothing has came of DRS other than pain and misery. At the same time that I was trying to warn everybody about DRS, you had the other folks, of course, promoting it. So backwards from the China situation. So whenever I was trying to promote a situation that I felt was going to be profitable in the long run, others were saying, no, stay away. When I was trying to warn against the effects of DRS and what it could mean for potential shareholders of AMC and GME, I got attacked, called a shill, and at the same time, others are promoting it. Because guess what? It's all about views. It's all about likes. But that's not the case with me. For me, it's about truth. Hopefully, some of you by now are starting to see and can respect that I'm at least trying to only go with facts and not emotions. So China, since late 2021 is when I started talking about it, got in a little bit early. As we've all learned in the group, I am always early. However, today we are all reaping the benefits from this opportunity, and it will not stop, and it will continue for the foreseeable future. And that's most tickers we picked. There was a list of constituents that we chose, and most, if not all of them, have recovered substantially. And again, this is just the beginning because they're just now turning profits. COVID lockdowns easing in China. Everything's shaping up exactly how we read about in the documents. And that's the beauty of this, is that it's all written down in documents. So just keep that in mind. Now, AMC and GameStop, since DRS was started. And again, this all started around the same time, around September of 2021, sorry. And if you look, since DRS started, nothing has happened other than the stocks went down. Now, there is a little bit of a difference here. I'm going to get into that in a second because I'm still bullish on GameStop long term, and I'm going to show you exactly why. This is not an anti-AMC GME video. I wouldn't be where I am today without AMC and GME, and I'm very grateful for that. But again, I have to explain the reality to you. So again, all this hype, all of these attacks about DRS, and yet nothing happened except the price went down. Same thing with AMC, and AMC's in a little bit worse of a situation than GameStop due to their financial situation, which I'm going to get into. So what's the difference between the two methods that we just saw? It's very simple. Research. If you're not researching and you're listening to other people on YouTube that have alternative motives, which are to garnish as much views as they can, to make as much ad revenue as they can so that they can stay afloat, that is one way to do it. And then the other way is to provide factual information despite what the general crowd feels and give them the facts for what they are and allow them to make their own informed decisions based on factual evidence. The research shows GameStop's time is drawing near. Now, let's go ahead and go through this. Again, I've covered this several times on my channel, but I'm going to go ahead and go over it again. This is from Mr. Ryan Cohen. He sent this letter in 2020 to the GameStop board before he became the chairman, and this is what it says. Dear members of the board of directors, RC Ventures LLC, together with its affiliates, RC Ventures, is one of the largest stockholders of GameStop Corporation, with ownership of approximately 9.98% of the company's outstanding common stock. Given that our attempts to privately engage with you since the summer have yielded little progress, we feel compelled to send a clear message to the board today. GameStop's leadership should immediately conduct a strategic review of the business and share a credible plan for seizing the tremendous opportunities in the rapidly growing gaming sector. GameStop needs to evolve into a technology company that delights gamers and delivers exceptional digital experiences, not remain a video game retailer that over-prioritizes its brick-and-mortar footprint and stumbles around the online ecosystem. It's important to reiterate that we have devoted a significant amount of time to analyzing GameStop's assets, balance sheet, corporate governance, opportunities, and positioning within the sector. Our investment thesis was predicated upon a few core conclusions, including the gaming industry is experiencing explosive growth, with the global gaming market expected to be $174.9 billion this year, which is 2020, and reach $217.9 billion by 2023. And again, it's 2023 now, not in 2021, not all of last year, while the price was continuously going down. So if you would have just read this document and stuck to it, you wouldn't have had any problems buying puts on GameStop all last year, and you would have made bank because you would have gone against the hype narrative that means absolutely nothing. 100 million people who all think the same incorrect thing will not make that incorrect thing reality. That's just how it works. Now, number two, GameStop has valuable assets, including a strong brand with a large customer base and 55 million power-up members at the time of writing. Despite GameStop losing substantial market share to forward-looking competitors, the company can still emerge as the market leader and ultimate destination for gamers if the board can set a credible strategy for capturing growth opportunities. We recognize that the board may feel it is insulated from stockholder scrutiny after adding new directors this past spring and seeing a recent stock price uptick, which only came on the heels of RC Ventures filing its 13D. We also understand you may expect that the new console cycle will at least temporarily appear to validate the company's adherence to an outdated business model that is over-dependent on brick-and-mortar sales. In our view, all of these assumptions are faulty and short-sighted. We urge the board to give the right level of consideration to our assessment of GameStop's challenges, opportunities, and ideal path forward. Additional detail on all three of these points is included in this letter. GameStop's challenges stem from the internal and the unwillingness to rapidly embrace the digital economy. So that's before he took over. And again, there's another page here I'm going to go over real quick. There is no doubt in our minds that GameStop has the flexibility to evolve into a technology-driven sector leader. As you know, the company's average lease duration is approximately 24 months. Now is the time to identify duplicative, underperforming stores and plan to forego these lease renewals, which they have done. Non-core operations in Europe and Australia can be streamlined or sold in order to reduce losses and potentially generate cash. While the Australian market has shown signs of life, it is not nearly big or strong enough to offset the losses linked to the company's hundreds of stores across European nations. In addition, near-term increases in cash stemming from the console cycle can also help finance the future, provided that capital is not misallocated to risky initiatives. Taken together, these factors can fuel the necessary investments that GameStop could be making to delight and retain gamers well into the future. Taking the right steps in 2020 and 2021 can enable GameStop to own a bigger share of the market when estimated industry sales explode to more than $200 billion per year in 2023. We contend the company's sales should be growing at least in line with the market, not going in the opposite direction. Significantly upgrading e-commerce can provide for greater revenue capture across larger gaming catalogs, digital content and community experiences, online trade-ins, streaming services, and esports. What about AMC? Now, AMC is a little bit differently because unlike Ryan Cohen, who is a very good leader for the company, very good chairman, on the other end, you have someone like Adam Aron, who has no plan to get his company out from underneath their debt, who has no plan to make their shareholders the priority, who has no plan to do anything other than continuously make schemes to trick AMC apes into buying more stock, voting yes for more dilution, so that they can pay off their debt by diluting the stock. They are dilution dependent, and that has proven true over just the last 6 months. The only way to fix their debt deficit is continued dilution at this rate. AMC is facing challenges due to a competition from streaming services and a lack of new film productions. To stay afloat, they have invested in alternative businesses such as Highcroft, things like that, but those initiatives are unlikely to yield significant returns. AMC has been raising cash through the issuance of new stock, including the creation of AMC Preferred Equity APE units. To further raise cash, they are planning to dilute their shares by increasing the authorized number of AMC common shares and conducting a reverse split of AMC common shares. These moves are intended to protect AMC stock from a downturn. Well, the downturn's already happened, and most people got burned from it. Now, again, it's just the markets. You can't hold a moral compass on tickers in the name of something that isn't even real, like apes that were created from Reddit, which was likely created from institutions who were drawing everyone in to the big rat trap. So what to do moving forward? Well, how about let's start covering markets again in an accurate fashion so that maybe more of you can get in on real opportunity and makes a little bit of money. That's always good. But the virtue signaling stuff, where did that get anybody? Nowhere. Because guess what? The documents always win. And as per the documents, China has started to recover. AMC and GME have done nothing but go down, other than GME, who finally made earnings very recently. But we'll have to wait and see where it goes. I am very bullish on GameStop this year. Not quite yet, but in the near-term future, definitely going to be eyeballing it. But AMC just kind of flopped. I didn't think everybody would vote yes again for more dilution, but they did. And now, what do you know? China's more expensive than AMC. So full circle, I would have to say absolutely. So, we're going to be looking at things like this: the public inspection documents from the Fed Register, the DTCC, NSCC, and FICC important filings that are very relevant to markets, the reverse repo operations and their impact on financial markets on an intraday basis, the money market funds who conduct the reverse repo operations and their holdings, and of course the over-the-counter markets like the FINRA over-the-counter, All these things are important, but no one wants to cover them. That's the kind of stuff I like to look at, and that's the kind of stuff that you can derive opportunity from. So again, I will be back, and the accurate information, hopefully, will be exactly what a lot of you have been wanting and looking for. So again, just keep in mind, the work never stops, the evolution never sleeps. Prepare to learn the markets the right way. To everyone that stuck with me this whole time, you have my utmost respect, and I will continue to provide you with accurate information as I'm just getting started. Trust me.